Wall Street flat Friday as investors look to next week's Federal Reserve policymakers meeting. Well, let's get some thoughts on the Fed and the outlook for inflation from Greg Powell. He's president at Five Plan Partners in Birmingham, Alabama. Welcome back. It's been a while. Good to see you, Greg.
Fred, it's great to be here. Always an honor.
Thank you. Well, Greg, the markets, as you know, have been trimming their expectations for inflation this year. In light of the recent data we got in the jobs report and consumer prices, do you expect any surprises from Fed Chair Powell with the FOMC meeting next week?
No, at this point in time, and let me say no relation to Fed Chairman Powell, by the way, but I see no surprises coming forward here. I think that the Fed is focused on unemployment, getting the job numbers better. And with that in mind, I don't think that we have to worry at this point in time about seeing any tightening. I just don't see any situation there. The other thing is from inflation, I think this is kind of a temporary situation that we're in due to disruptive supply chains, increased consumer demand, and we'll come out of this.
You're not worried about, for example, rising wages as a pressuring on inflation?
Well, that's a great question. We are also not just, some would say we're in a recovery. Others say we're in a reset. I think we're in a reset. And what I mean by that, business models are changing. Well, just like the way people are interacting with technology and everything else. I just really think you might see some wages go up, but at the same time, we may see other things go down because of the pressures from technology, changing demographics, changing business models. So I think it's going to balance out in the end.
So I guess you're saying, Greg, is what? Don't fight the Fed?
Thank you for saying that. I was thinking that this morning that, we may be in scenarios that are new to us, but there are some sayings you can stick with. Don't fight the Fed, and the trend is your friend. And through your years, Fred, as like myself, those have proven to be truisms.
Well, Greg, given your scenario, your outlook that inflation will be temporary, how should investors position their portfolios?
Well, there's a couple of things there. First of all, that I'm real big on financial planning, doing a financial blueprint in relation to the markets and your portfolio. The reason I'm saying that, you can run hypotheticals as though inflation gets worse. We run our financial blueprints here at a 3% inflation rate. We stress test the scenarios of our clients in relation to their portfolios in the economy. That way, when COVID comes along, when a 2007, 2008 financial meltdown comes along, whether it's inflation or other severe scenarios, they have an idea where they stand on that. Now, that said, is that at this time, with inflation being the hot topic, then look towards those sectors that would benefit from that, like materials, industrials. Those are two areas, get into some sector funds. I'd recommend that would benefit from inflation and consumer demand and take advantage of that right now.
So I guess you're looking at a conservative scenario with your stress test portfolio. What would you do about treasuries? Right now, we've seen those yields in a tight trading range. And if anything, we've seen those yields come down, getting low below 1.5%. What does that mean in terms of the hedge of treasuries?
Excellent point on your part, Fred. I mean, with the yields coming down like that, I think what we're seeing, the market's buying into the Fed itself saying, hey, this inflationary situation is temporary due to supply chains being disrupted and other things that we're going through. And I think the market is reflecting that. Now, at the same time, though, if you study what's going on here, we've had a great run up in the market. A lot of pension funds are now fully funded. So if you were looking for a pullback in the market, you might see that because these pension funds start to liquidate their equity positions to lock in and go into some corporate bonds or things like that to be able then to say, hey, we've got this thing fully funded. That's pressure off of us. And so, I think in the summer months here, if we have a little bit of a pullback, that can be healthy.
Okay. And thanks for telling us about your stress tested portfolio.
Oh, absolutely. I'm a big believer.
Okay. Our thanks to Greg Powell of Five Plan. I'm Fred Katayama in New York. This is Reuters. Have a wonderful weekend.